Welcome to the Transparent FX Academy. In this video, I'll speak about GBPUSD. And as usual, to keep the video as educational as possible, first, I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what the big players in the market are doing and how they're moving and shifting their orders, which is what you see right here. By the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we can see is that we just had a quite important break of structure. In fact, first the market had created this massive impulse to the upside. However, we then had the break below the previous level of resistance, which was supposed to be turned support here, but the market failed in respecting it as support. And now the market has broken back below this level of supply and resistance. So we have previous supply and resistance currently still acting as supply and resistance. And in a situation like this, what usually the market does is it goes and retests this previous support and resistance and then rejects it to the downside. So here in the monthly, everything seems quite bearish, and especially if we are seeing institutional shorting of GBPUSD, there is good probability to see it continue lower. And we will be speaking about institutional positioning in just a few moments when we move to the commitment of traders analysis. But for now, let's keep in mind that we are seeing a strong break of structure to the downside, and we also have to keep in mind that there is the possibility to see the retest and then the rejection to the downside. Let's drop down on the weekly time frame and see what we have. Now, from a weekly standpoint, what we can notice is that the market also from a weekly perspective has been respecting this level as structure. It clearly respected it here as supply and resistance. We have already seen this on the monthly time frame. Then again here, the market tried respecting the level as resistance, and in multiple occasions for 3 consecutive weeks, the market respected it as resistance and rejected the level to the downside. Then we had the break above the zone. And what we know is that previous resistance, once it is broken to the upside, starts acting as support. And in fact, the level acted as support here, and again here. However, the market has now broken back below the zone. So the previous support is now again acting as resistance. And as we have already seen by looking at the monthly time frame, in a situation like this, the next logical step would be to see a retest of the previous support and resistance, which is perfectly the inverse of what happened here. So here we had the break to the upside. So when you have a horizontal level of structure, which is acting as resistance, and the market breaks it to the upside, you expect the market to do a retest and then reject higher. The exact same thing if we're seeing the break of structure of a level that is acting as support to the downside, you expect the retest and rejection lower. So in a situation like this, you would expect the retest and rejection to the downside. So here in the weekly as well, the situation is quite clear. Let's drop down on the daily time frame and see what we have. Now, from a daily perspective as well, the current structure is quite clear. We can notice how this level, which is the exact same zone we have already identified, is acting as previous daily support and demand. Currently, the market has broken it to the downside, so all that previous support and demand is now supply and resistance here, and you would expect a retest and rejection lower. We can also notice a strong impulse to the downside followed by the start of this correction. So after an impulse, if you want to measure the correction, you have to take your Fibonacci from the high to the low of the impulse leg, showing how we have the 50% and 0.618 Fibonacci retracements lining up exactly inside of this area, creating confluence of supply and resistance inside of this zone, because we have the Fibonacci levels also with the previous horizontal support turned resistance. And when we have a confluence of resistance zone, there is an increased probability of seeing institutional shorting inside of this level. Speaking about institutional shorting, let's go and see what we have when it comes to the commitment of traders. So what the big players in the market are doing. Now, if we're looking at the data for the GBP, we're actually already looking at GBPUSD because all currencies on the spot are traded against the USD. And what we can see is that with the last reports, the net positions have fallen drastically. We went from having 51.6K net positions, so a very positive net positioning with way more longs than shorts, 111,000 longs compared to only 59,000 shorts, all the way down to now having a negative net positioning with minus 12K net positions, with 6,600 shorts added just with the last report, 5,000 longs getting closed, reaching 99.8 thousand shorts compared to only 87,000 longs. So we went from having, again, more longs than shorts to more shorts than longs from an institutional perspective on GBPUSD. So let's keep all of this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to the analysis. So in a situation like this, if the market will now go and retest this confluence of support, what would I expect? Well, first of all, there is good probability to see more institutional shorting inside of this area. And as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of the market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to a bearish market, I wouldn't be surprised to see a potential rejection lower for the market to complete this daily impulse correction, impulse pattern to the downside. That definitely wouldn't surprise me. Now, if you want to learn more, I really recommend that you go and check out my website, which is linked in the description, because what you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you head over to the website in the description, you will have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much more. You will have the possibility, in fact, to gain access to the trading station software with the Telegram notifications integration, one-on-one private mentoring directly with me, the COT data software, which often you see me use directly in my YouTube videos, on all my platforms actually. And if you scroll down, you will see that you also have the possibility to get the integration. So all my EAs, which you find here presented one by one directly on the website. And you also have the possibility to gain access to my live trading show. So I live stream of all the trades on my live account as they're opened, closed, trade, and obviously managed. And if you continue to scroll down, you will see that you have the possibility to join just after here the testimonials and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that at least you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure that you leave a like. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Subscribe to the channel so you never miss new updates, and I will see you in my next video.